Elliott said the inevitable collapse of the crypto bubble could wreak havoc in ways we can't anticipate.
I was wrong. I'm sorry. I did make a mistake. Most content creators won't admit stuff like this, but I did make a huge mistake. At Altcoin Daily, we always try and bring you the best daily information on the crypto market. Please take 2 seconds, tap the like button if you appreciate us doing this, because most content creators won't make a video like this. So let's get into it. We originally thought that crypto was dipping because of a combination. One, Trump's tariffs.
The president will be implementing a 25% tariffs on Mexico, 25% tariffs on Canada, and a 10% tariff on China.
Two, DeepSeek.
Let's talk about DeepSeek because it is mind-blowing and it is shaking this entire industry to its core.
Three, Fed hawkishness.
We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change.
The real reason crypto is dipping, and again, I'm sorry I didn't bring this to your attention before. About 1 week ago, CNBC's Fast Money Jim Cramer became extremely bullish. This was an obvious top signal.
Look, I say if you want to own Bitcoin, own Bitcoin. I own Bitcoin. You should own Bitcoin. Bitcoin's a great thing to have in your portfolio, but not MicroStrategy. Just own the Bitcoin. That's enough.
Or maybe the president of the United States launching a meme coin was the top signal.
When I launched it, I heard it was very successful. I haven't checked it. Where is it today?
Either way, I want to say I'm sorry to you, because as I'm looking deeper into things right now, I do see that there is some heavy manipulation going on. This is a coordinated effort. Giant hedge funds are trying to push the price down as much as they can because listen to this letter that the Financial Times just happened to have discovered from Elliott Hedge Fund that CNBC just happened to cover. Why would they report on this if not to try to push the price down?
The Financial Times obtained a letter from the $70 billion hedge fund to its investors, and in it, Elliott is once again alarmed by crypto, which the firm says is, quote, ground zero for the speculative frenzy across markets. Elliott said the, quote, inevitable collapse of the crypto bubble could wreak havoc in ways we can't anticipate.
So do not be fooled. This is what the mainstream media does every single time. Like, do you remember this video and this article from 10 years ago by the International Business Times? This was a big story 10 years ago. If you're wondering why you never buy crypto at the lows, it's because of reporting from the mainstream media like this. The guy at the end of this is hilarious.
Over the past 15 months, the price of Bitcoin has fallen from a peak of around $1,200 to today's price of just over $200. While many see this spike as a bubble, some detractors have gone as far as to say that this cryptocurrency is nothing more than pretend money and has no real future. Indeed, one website tracking reports of Bitcoin's death has just logged the 40th instance that Bitcoin has been pronounced dead by the media. Author and Bitcoin skeptic Jeffrey Robinson claims there is no lower limit for Bitcoin.
Of course it can fall lower than that. You know, all commodities, even pretend commodities like Bitcoin, have a floor and a ceiling, except Bitcoin doesn't. There is no floor, it's zero. There is no ceiling, it's who knows. The idea, and I call them the lunatic fringe, the delusionals who say that Bitcoin will replace fiat currency. That's not going to happen. Now, well, disruptive technologies, you know, the US government and the British Bank of England may not have a choice. The problem with disruptive technology, and the Bitcoin people don't want to hear this, is that the disrupted has something to say about it. So I say 10 years from now, we will all have digital currencies, fiat currencies, and Bitcoin will be remembered probably much like Pogs and Sinclair's C5.
So which altcoins are you buying? I'm buying Bitcoin, Ethereum, Solana, Supra, Human's Heart Token, Foxy, Cody. Not financial advice, just what I'm doing. The number one mistake I see new people making in crypto is during dips like this, thinking that it's all over. It's not timing the market. It truly is time in the market, and you have to be in the market at times like this. You won't become a millionaire in crypto until you understand this 2-minute video. Next time somebody says, hey, crypto's just a bubble, show them this.
Ladies and gentlemen, bubbles have 3 characteristics. They tend to be a single cycle, boom, then bust, relatively short in duration, and crash back down to the baseline, which is either zero or the inflation-adjusted place of where they were before the boom. The Dutch tulip mania was like this. So was the housing bubble. So was the dot-com bubble. and so was pretty much every other bubble ever. So what about Bitcoin? Well, Bitcoin is actually hard to see the price cycles because it's increased such radically in value over time. So we're going to use a logarithmic scale to look at what it looks like on a price cycle where you go from $0 to $1, then to $10, $100. It's called the logarithmic scale, which is often used for assets with this level of upside. So in the first price cycle, Bitcoin went from about 5 cents up to $32, back to $2. Now, if we were having this debate in 2011, you could be forgiven for believing it met 2 of the 3 criteria of a bubble, except that it landed at a price that was 40 times as high as the 5 cents that it started at. What happened next? It didn't go to 0, it went up to $1,200, came back to 92, meeting now none of the criteria of a bubble. Then what did it do? Well, it zoomed up to $19,000, down to $3,200, meeting, once again, none of the criteria of a bubble, 35 times the previous low price. Then it zoomed up to $69,000, down to $15,000, once again meeting none of the criteria of any historical bubble we have ever seen. Bubbles look like the bottom left of this chart. They do not look like the orange line. So what does look like that orange line? Well, it turns out every high value asset that has ever become a $1 trillion industry or asset looks just like that on a logarithmic chart. Apple, Amazon, Netflix, even gold, when you zoom out, goes through the same pattern. And all of these assets do it for the same reason. The marketplace is trying to figure out how big of a deal is this asset, how big of a deal is this industry, and what role will this commodity, technology, or company impact in the global world. Bitcoin's doing the same thing for the very same reason, which is the opposite of how any bubble in human history has ever behaved. So why is it valuable? Well, for the first time in human history, we have a borderless, predictable, and scarce monetary asset. So what do I mean? Borderless because Bitcoin is decentralized. It's not controlled by any country, company, or anybody. And that means Bitcoin is not like fiat currencies, which is nothing but a bunch of fiefdoms all over the world. And borderless because you don't have to have the government's permission to cross a border with more than $10,000. Bitcoin is a decentralized and borderless currency that is valuable because the world has never had a universal worldwide currency that worked like Bitcoin. Bitcoin is also predictable, absolutely, completely unlike the Federal Reserve, where even the experts get it wrong every time. And having a money that is absolutely predictable is a very valuable characteristic. Also, Bitcoin is scarce, truly scarce. There will never be more than 21 million Bitcoin, ever, as opposed to fiat, which is as infinite as a politician's promises.
Volatility equals opportunity. You don't get the 200% pumps without the 20% dumps. Like taking a look at some of our past expert interviews, there's still a lot of upside this cycle.
100%, there's zero doubt in my mind, it is happening. I will bet anything to anybody on this planet, my entire net worth. I guarantee you, Aaron.
Just in a sentence, Bitcoin clears at least this price this cycle. What do you think?
I'm actually afraid to tell you what I really think is going to happen. It's so far out from what most other people believe. Some people think like 120,000. Are you kidding me? Like, do you only look at charts, or are you understanding what's going on? $500,000 at least.
This cycle?
Yes, of course. So and this is kind of, I'm glad you asked me that, because gold has been the reserve currency for thousands of years. We are seeing in our lifetime gold being displaced by a more superior version. This is unbelievable. And it's all the numbers are all the data is out there to suggest that we're right. The ETF flows have been unbelievable. Gold is flowing out and Bitcoin's flowing up, and we know it's better. This is going to be the first domino.
Like crypto is a nascent industry exploding with growth. Bitcoin is literally replacing gold right in front of our eyes. Anthony Scaramucci gets this. Do you?
There's a reason that Bitcoin should get to $800,000-$900,000 a coin, and the answer to that is gold. There's no reason why it couldn't trade to the market capitalization of gold. And by the way, it's 0.1% of global assets today as a percentage of assets. So if it gets there, it's like 1.5% of assets.
If you're interested in making money in crypto, make sure you subscribe. And next time somebody says, I don't want to buy this dip, crypto's too volatile, crypto's just a bubble, make sure you show them today's video.
This one time, Bitcoin went from 6 cents all the way to 36 cents, and then it crashed down to 21 cents. And then another time, Bitcoin went from 85 cents all the way to $29, and then it crashed to $3. And then another time, Bitcoin went all the way to $213, and then it crashed all the way to $70. And then another time, Bitcoin went all the way to $1,100, and then it crashed all the way to $239. So the moral of the story is, don't buy Bitcoin, because you know it's going to crash again.